New bill would eliminate taxes on Social Security. All right, this is the third email I got on this today. Third. The first two I just emailed them back and said, email me when it's in past a committee. It hasn't even passed a committee. It's just a proposal. But the fact I've got 3 emails in one day on this exact same topic tells me that this is important, you guys. So we're going to talk about it because it's of interest and it gets us rethinking how taxes on Social Security work. All right. From smartasset.com right here. We talk about Social Security is the cornerstone for American retirement. Yep. All right. We're going to go down here. As of 2022, Social Security payments are generally taxable. To see if you'll pay taxes on your Social Security, you'll need to first find your combined income. We'll talk about that more in detail here in just a second. But I want to, because we're going to go through a couple of samples on a spreadsheet. Your combined income, or what we would call provisional income, that's what I call in my book, provisional income. It's the exact same thing. I don't know why we started calling it provisional income when actually the IRS calls it combined. I don't know why we use provisional income. It's the exact same thing. It's the same meaning. Combined income. This determines how much of your Social Security benefit is subject to taxation. You take your AGI plus your tax-exempt interest. This will be your modified adjusted gross income, your AGI plus this right here, plus 1/2 of your Social Security benefits. Don't worry if you don't get it now. We're going to go into it here in a spreadsheet. All right, so in this case, if the number of your combined income is more than $25,000 and you are single, you have to pay some tax on your Social Security benefits, says Smart Asset. And they're wrong. They're wrong here. I'll prove it to you. It's easy in just a second. If you're married filing jointly and your combined income is above $32,000, you'll have to pay some tax on your Social Security benefit. Again, they're wrong. And I'll prove it to you. All right. But a bill currently floating on Capitol Hill would make it so that the federal government takes no money from Social Security. The proposal is from Angie Craig out of Minnesota. All right. To make up for the lost revenue, she's proposing raising the cap on Social Security payroll taxes from $147 to $250. All right. Now, it doesn't mean anything yet because a bill is just a proposal. It's not even in a committee, not even out of committee, not even out of the House of Representatives. Never mind the committee with Senate, and it hasn't passed the Senate, hasn't gone through the House, the Joint Committee. I mean, it's a long, long way to go. And here we are, September 1st. Highly suspect this won't go through, but I'm looking forward to seeing if this gains any traction or other bills like it. I think there's another bill that's bipartisan. I think is it a congressman or a senator, a Republican is co-sponsoring a bill with a Democrat. I forgot, but anyway, let's see. Even if there's currently enough support for the bill on Capitol Hill, there is an election coming up, and if the Republicans take control of the House, they'll kill any Democratic legislation. Yep, I agree. The individual. All right. Anyway, so this. Let me read what my man who had emailed me this. I think is Ed. Yeah. Ed. He goes. He asked, "Do I think this will gain any traction, or is it just another ploy to get more votes for those in the Democrats? If it's vote grabbing ploy, I have to admire their creativity. If it's truly legit, I like it. Yeah. Well, that's what. And it is a vote grabbing ploy. That's what politicians are supposed to do. Hint, hint, Republicans." Freaking pass stuff to make your voters happy so they want to vote for you, freaking fools. Nobody wants to pay taxes on Social Security. The Republicans are supposed to be the party for tax cuts. Thus, you say with one unified megaphone, we're going to eliminate taxes on Social Security benefits. It's just such a winning. There's no reason not to do this. And you can raise a cap, man. I don't care. Look, at this stage, I'm surprised the cap has survived as long as it has. You can just look. It's going to go away. You might as well get credit for it. It's such an easy win. Tax cuts for middle class people. This is make sure there's no tax on Social Security benefits. It's such an easy win. How we pay for it, as if that matters than anything else. But if you want to say, well, raise the cap, I literally don't. At this stage, I don't care. It's because it's so blindingly obvious that yes, it's political, but the Democrats are good at politics, and the Republicans just, I don't know. They don't even try. All right, so let me show you why Smart Asset is wrong. So we're gonna go here. I got this simple spreadsheet here. All right, and so remember, with combined income, if you're a single filer, you take your all of your other income, whatever you got, plus any tax-exempt interest, plus half of your Social Security. That gives you your combined income, which will show how much of your Social Security is subject to taxation. But there's more to it than just that. So in this case, we're going to say Paula. We'll just say Paula has $40,000 of Social Security. All right, we're just going to say her PIA was $33,000 X dollars a month. That's her primary insurance amount, which she took at her full retirement age of 67. All right, so we're going to say she has $40,000 of Social Security. She has no other IRA distributions, no other income. She's living on Social Security. How dare you say that, Josh? No one can live on Social Security alone. There's a guy on my YouTube channel he says it all the time. I just do. All right. So she's living happy as a clam on $40,000 a year. So we take her combined income to see if any of that is subject to taxation. And what we do is we take all of her other income. She has no municipal bonds, no part-time income, no IRA distributions, and we essentially just take half of her $40,000. So her combined income is $20,000. Now, if you're single, if your combined income is less than $25,000, none of your Social Security benefit is subject to taxation. Not you pay tax on it, subject to taxation. So we'll go in that here in just a second. Now let's just say she needs $10,000 to paint the house. All right, so she takes $10,000 IRA distribution. So now her combined income is what? It's $30,000 because we take half of this plus her other income, and half of $40,000 is $20,000 plus her $10,000. Her combined income is $30,000. Now, Smart Asset would say because her combined income is over $25,000. What's this right here? I hate all these ads, dude. It drives me up the wall. Because her combined income is over right here. If the number is above $25,000, you have to pay some tax if you're single. And no, she won't. All right, so now we have combined income of $30,000. The first $25,000 is completely tax-free, all right? The next $5,000, so we have $30,000 minus $25,000 tax-free. The next amount between $25,000 and $34,000, half of that is subject to taxation, not taxed, but subject to taxation. All right, so we have $30,000 combined income minus the first $25,000 is tax-free. Thus, $5,000 is subject to taxation, but only half of that amount is subject to taxation because the first, if you want to call it, bend point of combined income is 50%. So that right there is the amount we take to the 1040, and we say she has $40,000 of Social Security. $2,500 is subject to taxation. So let me show it to you in Right Capital. You'll see what I'm talking about. All right, so again, just going back to the simple spreadsheet, $2,500 is her combined income, but after her standard deduction, which I'm going to share with you, she's not having any taxable income. So let's go into this. We're going to go to Right Capital. All right, here's Paula's sample. She has $39,600 Social Security. We just used a PIA, think of $3,300 bucks. Anyway, so $39,600. Notice no taxable amount at all, none. All right, that's because that's all she has. Now let's do a $10,000 IRA distribution, and we'll show you. So we have $39,600 of Social Security plus a $10,000 distribution, which means, see, I was spot on. I had $2,500 as her taxable. How much of her Social Security is subject to taxation? But the only reason I had that is I did $40,000 as her Social Security benefit. We're now doing $39,600, and you can see that right there. Of the $39,600, only $2,400 flows over to line 6B as taxable Social Security. So we have a $10,000 IRA distribution. We have $2,400 of taxable Social Security. We go down here. Her total income is $12,400. Her standard deduction is $14,700. Her taxes are big fat goose egg. So even though she's above the 25,000 threshold for combined income, she still pays no tax because her standard deduction is more than her AGI, other income, plus her taxable Social Security. All right, so let's see. I think I got her. Let's see what we have for RMDs in here. If we have an RMD, let's see. I just, again, we're just using a sample here. We're gonna go to cash flows. So here we got RMDs right here, 22,000. Perfect. So this will be a great 2027. Let's go to tax for RMDs. We have 22,000. We're gonna go to 2027. All right, and we're gonna look at the 1040. Details. 2027 when she has RMDs and increasing Social Security. I don't want to qualified dividends. All right, hold on a sec. See, we're going to run with it because this is part of your total income when it comes to calculating how much of your Social Security is subject to taxation. So here we got some taxable interest, $1,500. We have some qualified dividends, so that's what $3,000, $3,500 of qualified dividends and taxable interest. Taxable interest is taxes ordinary income. Qualified dividends won't be subject to taxation. I'll show you. All right, so we come down here. We got RMDs, required minimum distributions of 22,000. All right. Now we go into the spreadsheet here. We have 22,000 of RI required minimum distributions. All right, so now the first 25,000 is free of any tax, 0. The next 9,000, 50% of that is taxable as 50% of that. So 50% of the next 9,000. So I want to do this in one second. Let me make this simple. All right, just for simplicity's sake, we'll just put 24,000. It'll make sense what I'm doing. All right, so we have 44,000 is her combined income because we have $40,000 of Social Security. Actually, her Social Security is what, 42,000? I'm trying to make it as close to this as I can at 42,000. So we have 42,000 of Social Security plus 24,000 of other income. IRA distributions, 22,000 plus another 3,000 or so from qualified dividends and taxable interest. All right, either way, we take half of this, 21,000, plus her other income, which would be 24,000. So her combined income is $45,000. All right. Now we take the first 25,000 is tax free. The first 25,000 is tax free. So that leaves her 20,000 of her Social Security will be subject to taxation. Subject to tax. But the first 9,000 of this is only subject to 50% of that is subject to taxation. All right, so we take this times that blank, 4,500, and then we're gonna do. I think that's right. We're gonna do this. Yeah, there we go. Sweet. There we go. All right, so 50% of the amount above 25,000 up to 34,000 is subject to taxation. So we know 9,000 bucks, 4,500 of that is subject to taxation. Any amount above 34,000 is subject to 85% of that is subject to taxation. So we take these two numbers equals this plus this. And we know that $13,850 of her $42,000 of Social Security income will be subject to taxation. It won't be exact because I'm kind of rounding up a little bit of numbers, but we see they got $16,288 because they're actually having a little bit. Actually, we got about $3,500 of other income plus 43,000 Social Security. So they're using 43 plus 35. They're using about 47,000. Let's just, I'm sorry, they have 43,000 of Social Security. There we go. Plus they're using about 24,000 of RMD, and they're using about 20, what do they got over here? 22,600 of RMD plus another 3,500. They're about 26,000 of other income. So we're going to put that at 26,000. So it should be pretty close. We're just rounding up a little bit. 15,975 is the amount of her Social Security that will be subject to taxation. Yeah, right about there. So I'm pretty doggone close with just top to the bottom of the envelope. So basically we have $43,000 of Social Security of which only 16,000 is subject to taxation. All right. So we take all of her income, basically 3,500 bucks here, plus her RMD, 22,000, plus her taxable Social Security, 16,000, and that gives your total income 42,000 bucks. Now in this case, she has personal exemption of 4,500. It says QBI, but that's once the Trump tax bill expires in 2026. This will be personal exemptions. Plus, she has 10,300 standard deductions. So in this case, her deductions are 14,482. Subtract her AGI minus her deductions, and here is her taxable income, $27,000. All right, so just remember, which means she pays 3,000 bucks in tax. So 43,000 plus 22,000. What is that? That's 43 plus 22. That's 65,000 bucks. Basically, she has $70,000 of income, and she's paying 3,000 bucks in taxes. Yeah, again, look at that, man. She's an effective 7.8% tax bracket. But you see how that works now. I mean, Social Security isn't subject to huge amounts of taxes if you have lower other income. It can be all tax-free. If all your benefits from Social Security is completely tax-free. Either way, it's a winning strategy politically to say we're getting rid of all tax on Social Security. That way we don't have to do all this stuff. I think it's great. I don't expect it to pass. We're in September of an election year. No. But hopefully the new Congress, the Republicans will win the House. Seems a little bit motivation that they might have an outside chance at the Senate now. I don't expect that at all. But be that as it may, that's how you figure out your tax on Social Security. And Pablo wants you to know it looks good. Right? What do you think, Pablo? Bark if you don't like it. Look like you're stoned if you do like it. Yeah, he looks like he's stoned, so he likes it. Love to hear your thoughts. We'll see you